Good morning, I'm Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics behind the biggest moves in the stock market. It is presented with comedic common sense by an expert in financial literacy, and hey, that's me, Larry Steinhouse. Today is Friday, February 4th, the end of the first week, or the end of the first trading week. Hey, I want to welcome you to the show. We are here live on WWDB Radio in Philadelphia, and we are live on Facebook and Twitter and LinkedIn and YouTube. And of course, by the way, my Twitter handle is @Larry Steinhouse, and you can find me on Facebook, TikTok, and other social media by searching Larry Steinhouse. Just a reminder, if you're watching online, hit that like button, hit that share button, and don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. You can comment live during the show on YouTube and Facebook and LinkedIn and Twitter, and please say hi so I know you're watching. Hey, Bill. Good morning, somebody. I can't tell who you are because, check this out. If you're commenting from a group and not the Money Chat Now fan page, your name will not show up on my dashboard, so I won't know who you are. So please go to the Money Chat Now page and comment there so I can recognize you. Money Chat Now is brought to you by Investor Schooling, and you can attend a complimentary class this Thursday by going to investorschooling.com, and there you will learn about real estate investing and stock options trading from those who do it every day. All right, on today's show, we're going to be talking about the futures update. We're going to be talking about the fact that Facebook had the biggest drop in history yesterday. We're going to be talking about computer chips. We're going to be talking about traveling in 2022 and meme stock traders. All right, let's talk about what happened yesterday and what's going on and all these crazy stuff. Real quick, I'm going to say hello to Charles. Thanks, Charles. I totally appreciate you watching. All right, well, Facebook really screwed up the market yesterday. Man, did it screw up the market yesterday. I did predict the Dow would tank about 500 points, and I was dead on. The NASDAQ was destroyed, and it was down over 500 points as well. Oh, it was horrible. The disappointing news, disappointing news by Facebook, by the way, now called Meta, sent shockwaves to the market and scared everyone into selling out their positions. I do have to say this is a typical knee-jerk reaction to bad news. I also have to say that when I examine the fundamentals of Meta as a stock, I actually see it as a real value at this price under 240. Yeah, look, the stock definitely should have dropped yesterday, but there's no way that this stock should have dropped 27% yesterday. That was ridiculous. 10% would have been more logical, but Wall Street never works on logic. They only work on emotion. So mostly every stock was pulled down by the drop in Meta, and of course the hardest hit were the tech stocks. Twitter has an earnings report next week, and I was kind of hoping for the stock to go above 40 before the announcement, and although this is possible, it may not be probable at this point, but it is what it is. You know, the woes of the market, they can really make you mad, they can really make you sad, or sometimes they make you glad, yay! Oh boy. We have the official payroll report being announced today, and as I have discussed a few days ago, Biden has already set up the excuse for the possible low numbers to be blamed on COVID, by explaining that when people were sick, they stayed home and didn't get paid. I gotta tell you, this is such a crock, by the way. Most companies have COVID sick leave policies, and the ones who don't, believe me, those employees went to work anyway and just told everyone they had a cold. You know, like the old days. I got the sniffles, stay away from me, don't shake my hand. Really? We will see what the report brings, but the economy is definitely showing signs of cracking, and those cracks are getting bigger and bigger, and it's making me nervous. The good news is that last night, Amazon reported earnings and crushed it. Amazon reported that their earnings per share were 27.75, and the stock popped. And then they also announced that they were raising prices on Amazon Prime. You know, I don't know if you guys remember, but many years ago, Netflix announced that they were raising prices, and their stock dropped because they thought they were going to lose subscribers. Well, what actually happened was not only did they raise their price, but they also gained subscribers. And then in the future, every time Netflix raised their prices, the stock actually went up. Amazon is seeing that same result. The stock rose almost 19% after hours. And then, all of a sudden, Snap announces their earnings. And I still don't get this one. They reported a profit for the first time ever. They actually blew away earnings at 22 cents per share versus 10 cents a share, which is what the market expected. And their user growth was also good as they moved into 319 million average daily users over the expected 300 17 daily million users. Their revenue was 4.6 cents a share versus 3.79 cents per share, which was expected. And sure enough, the stock pops 42% after hours. What the heck? It blows my mind. Now, it may push Twitter up as well, and I may actually end up breaking even on my Twitter play after all. Look, all these earnings are not surprising, but I got to tell you, Facebook plummeting 27% yesterday absolutely amazes me. I just can't believe that really happened. So Ford didn't do so well in their earnings report, and they blamed the cargo bottleneck as the reason. So the stock is below 19 again, and I'm going to tell you, I'd wait for Ford to hit 15 or 16 if you wanted to get in. Right now, the Dow, the futures are surprising me. The Dow is down 130, S&P is down 2, but the Nasdaq is up 72. I really expected the market to pop today, and it's still May. Hey, I want to say hello to Kelly out there and Moshe out there and James watching on YouTube. Thanks so much. And you guys are coming up hey, I want to say hello to Dave as well. And there's one or two of you guys are coming up that I don't know your name. Hey, Jeff. But there's a couple other people that I don't know your name. And the reason is go to the Money Chat Now page and comment from there so I can see your name. Facebook has been blocking names that aren't commenting from the page. All right. I want to talk about some biggest drops in history. As I mentioned earlier, Facebook stock tumbled an incredible 26 to 27% yesterday. This drop was the biggest drop in history for a stock, and not necessarily the percentage, but the dollar amount value of this drop. The drop caused a market cap loss of $237 billion in value. Oh, man. This was really rough for shareholders, options traders with calls, and of course, if you had a put, you would have killed it. You would have made a lot of money, but also the funds that hold Facebook stock also got killed. Well, there have been other notable drops in history, and here are some of the companies and their drops. So in September 2020, Apple dropped $182 billion in market cap. In March 2020, Microsoft dropped $178 billion in market cap. Apple in March 2020 dropped $156 billion in market cap, and again in September 2020 it dropped $141 billion in market cap. In November of 21, Tesla dropped $140 billion in market cap, and in July 21, Amazon dropped $138 billion in market cap. Facebook, by the way, also in 2018 lost $119 billion in market cap, and then Apple in March 2020 also lost $119 billion in market cap. Look, if in this list we have all these companies that bounced back quickly and actually went past their original valuation before the drop, we may have a clue here as to where Facebook stock is going. The clue says that Facebook will bounce back and surpass its all-time high of $385. Now, if it's true, Facebook has just become the bargain of the year. I got to tell you, I'm in on this play, and I suggest you do the same. I think the stock is a good play. I think it's cheap right now, and I think it will do very well. The PE is ridiculously low. It's only at 17. And I think it's an awesome play. On another note, we discussed yesterday that Google has announced a 20-for-1 split of the stock, and that will occur in July. I'll tell you right now, here's the play for this stock. Buy 5 shares of Google right now at the price of about $2,900. So buy them in groups of 5, 10, 15, whatever you can afford. But buy 5 shares of Google right now at the price of about $2,900. Hold these shares to the stock splits, and then when it does, you will have 100 shares of the stock that you can sell covered calls from. This is an easy play if you understand covered calls and understand this stock will probably go up before the split. Most stocks run up as a split date comes closer. And it'll probably be a $13,000 to $14,000 investment. And if you have less than that in your account, using margin may help you get the shares. So I think this is an awesome play. I think you guys should get into it and play this play. Hey, I noticed that Gordon is online. Thanks, Gordon. I totally appreciate you, man. All right, let's talk about computer chips. We know about the chip shortages last year and how they affected many of the companies who sell products that rely on computer chips to operate. Ford stock was down this earnings period because they did not have the vehicles to sell because of the chip shortages. This year, many chip manufacturers are gearing up and making significant efforts to meet the new demand of chips. However, the world's largest contract chip maker is TSMC. So you might want to look that up. That's a Taiwan company. It's TSMC, and they've committed to investing $100 billion over 3 years to ramp up production of its cutting-edge silicon wafers, which are basically used to make the variety of chips in the market. And basically, it says in January that its capital expenditure will grow by 47% in 2022, adding that it plans to spend between $40 billion and $44 billion this year, up from $30 billion this year to build chips. So this might be a play. TSMC, it's a Taiwan company. I don't know much about it, but I think it might be a play if you want to take a look at it. Intel also announced last March that it plans to spend $20 billion on 2 new chip plants in Arizona. Intel has had a presence in Arizona for over 40 years. That's pretty cool. So if you're in Arizona, you can build chips. Samsung, South Korea's biggest company, has not given guidance for 2020, but last month the company revealed that it spent 90% of its 2021 annual capital expenditure of $40.1 billion in the chip business. Many of the other big names in semiconductors, check this out, this is something I didn't know, but many of the other big names in semiconductors like NVIDIA, AMD, and Qualcomm don't need to spend vast amounts of money because they actually contract out their chip making to TSMC and other companies. So they're not even making their own chips, they're actually contracting it out. So that's an interesting thing. I didn't know NVIDIA, I thought NVIDIA made their own, but I guess they don't. Now remember that the chip shortage was caused by factories being shut down during the government overreach and supply chain issue in both delivering chips and getting the materials to make the chips. As the industry ramps up to make these chips, we still have a backlog of consumer goods waiting for these chips. The real question is if there will be an oversupply issue once the backlog is filled. Will these companies actually end up with chips sitting on the shelves, or will they be able to move them all? I'm kind of thinking that they'll probably be able to move them all, because basically, look, the electronics market is ever changing and changing super fast. I mean, here are some other symbols of stocks you also may want to invest in as the market heats up. So these are basically the companies that supply the chip manufacturers with the raw materials they need to make the chips. So watch companies like ASML, Applied Materials, and Air Products, as the companies will benefit from this market. Hey, real quick, before we go to commercial, I want to say hello to everybody watching. Thanks, Tommy. Thanks, Michael. Thanks, Linda. All right, let's take a break, and we will see you guys in a minute.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start. Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from 2 Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
Welcome back to Money Chat Now. I am your host, Larry Steinhouse. And if you'd like more information on investor schooling, you can go to investorschooling.com or call 866-424-2829, 866-424-2829. Hey, I want to thank you all for listening on WWDB Radio in Philadelphia. And of course, if you're watching online, please hit that share button so you can help your friends learn about how to make more money. Hey, I wanted to thank Michael out there, because he always shares the show. I know when people are sharing the show, so go ahead and share it. Come on now. Hey, I want to say hello to William. I want to say hello to a bunch of people. Let me take a quick look here who I haven't said hello to yet. I think I didn't say hello to Dave. So Dave and all you guys watching, and William and Gordon and Michael and Tommy, thanks so much. I totally appreciate you guys saying hi. All right, so far we've been discussing the futures update, and the Dow. The Dow is still down 123. The S&P is still down just a fraction, and the NASDAQ is up 72. I still think it's going to be a good day, but we're going to find out real soon. We talked about Facebook being the biggest drop in history and how if I compare it, I actually think Facebook's going to come back really strong. And we talked about, of course, the computer chip shortage and how you can make some money on that. Coming up, we're going to be discussing travel in 2022, and we're going to be talking about some stories of meme stock traders. All right. And don't forget, we're also going to be talking about today's picks and plays. But did you guys hit that like button yet? Hey, Gordon, did you hit that like button yet? Go ahead. Did you hit that share button yet? Don't forget to leave comments on Facebook and LinkedIn and YouTube or Twitter. And of course, if you're listening on WWDB Radio, be sure and set a preset to this station and listen every day at 7:30. Also, when you get home, look up Money Chat Now on Facebook. And of course, like the page and let me know what you think. And of course, if you guys are commenting on Facebook, please comment from the Money Chat Now page, because then I'll be able to know who you are. All right, let's get into the second half and let's talk a little bit about what is going on with travel in 2020. All right, with the scamdemic coming to an end, well, at least coming to an end for liberals, that is. We all know the real pandemic ended about 6 months after it started. But anyway, with the scamdemic coming to an end, Americans are ready to travel again. Nearly 82% of people are in a ready-to-travel mindset in 2022, according to a survey published by a tourism market research firm. More than 92% respondents say that they will take at least one trip in the next 12 months, and on average, they expect to take 3 trips, the highest share in 14 months, according to a survey. So over 3/4 have dreamed about and planned travel in just the past week. It's pretty wild, right? A rate unseen since last summer. So the real question is going to be what the travel restrictions and requirements will be. Well, Gestapo Joe continues his ridiculous mask mandates for airline travel, and many countries want proof of vaccination status in order to enter those countries. Some will also require testing before entering and when leaving those countries. In this ridiculous age of the biggest scam ever perpetrated on humans occupying this planet, there are 3 different types of people. We still have the, I'm terrified of getting the cold people, and we have the, hey, let me leave my life people, kind of like me. Let me just do my thing. If I die of coronavirus, it's my own fault. And they aren't scared of the sniffles or a sore throat. And then, of course, we have the real sheep who will do as they are told just to comply and not be hassled. Look, soon we're going to get to a point where the sheep will stop complying and only the frightened scaredy cats will continue to wear masks and think that they are saving themselves in the world. That day can't come soon enough for me, honestly. I really like to go on cruises and I really like Disney. These are 2 places I won't go to if I have to wear a mask. To me, wearing a mask is not enjoyable, and I want to enjoy my vacation. Right now, Gestapo Joe has the plain mask mandate ending on March 18th, after the fascists extended that date from the mid-January ending because of the scary Omicron variant. Oh! And that continues to prove itself to be a cold. All right, we all know that President Poopy Pants is losing approval ratings, and maybe he will pull a trick from Boris Johnson in the UK and end all mandates to make people happy again. Ugh. With all this being said, I've been touting airline and travel stocks for a while now, and I continue to see them as great plays. I'm neck deep in American Airlines, and I still like the cruise stocks. The economy hasn't dumped yet, and although it's coming, and it may cause discretionary spending to drop, people are going to travel, and they're going to travel big in the next 2 years while they still can and while they still can afford it. So I'm telling you, this is the play. Hey, I want to say hello to Ken. Ken's saying, let's travel. And I want to say hello to Lewis. He says, good morning. Good morning. Good morning. All right. Let's talk about meme stock traders. In 2019, 2020, and 21, they were the definitely get-rich-easy and get-rich-fast years for many millennials and others who knew nothing about stocks, the stock market, or even how it works. People just bought and sold stocks based on cues given to them by tweets and posts on different online chat groups like in Reddit or other social media. It was a meme stock craze. Well, some people did very well in this environment and made some quick cash. Hopefully they sold it off. But the Wall Street Journal did a report on 3 meme stock traders and reported their stories. Here is some interesting part of that story. There was a woman named Joanna Burns in California, and she was riding the AMC wave when she got clues from Reddit that the stock would take off. She bought it high, and now, of course, she's far behind. She insists that the stock will come back and surpass the point where she bought it, so she's still holding on. Her plans are actually to pay off her student loans if this happens. I kind of hope she's not counting on that. The article didn't say how much she invested, but she continues to work her full-time job, waiting for the bounce back. Another meme stock trader mentioned in the Wall Street Journal article was Sam Daftarian. Now, Sam has basically called it quits on trading meme stocks. The whole meme stock saga, it's not sustainable, he says. Basically, he relished the trading and scored some profits riding the viral stock sensation, and Mr. Daftarian, who's 45, even pondered making a full-time job out of it. Yeah, you got to be careful with that. Since then, he's decided it's not for him. The turning point was when he got burned on an investment in the e-commerce company Context Logic after, you ready, hearing about the stock from his cousin, because his cousin was definitely a stock expert. Ugh. He poured thousands of dollars into shares starting in June, and the price tumbled, and he says he sold out of the investment with a steep loss. You know, it doesn't say how much he lost, but sure enough, I'm sure he lost a lot. The article discusses others who also had the same experiences. Now, I'm going to say that last year was a really rough year for me as well. However, I've been trading stock options for about 15 years, and I will tell you it takes practice, perseverance, and sometimes nerves of steel. Many people dabbled in the stock market without much direction in the past 3 years, and some got lucky. But my suggestion really is if you want to make money in the stock market, you want to learn the skills that are needed, and most importantly, don't lose money or don't use money that you can't afford to lose. No one can predict the market 100%. In fact, think about this. If you predict the market 65% of the time, you are considered at the top of the game. The top of the game at 65%. By the way, if you want to find out more about how you can learn how to invest in the stock market properly and have a much better chance of getting better picks, go to investorschooling.com and watch this commercial for even more information.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
Welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on investor schooling, you can go to investorschooling.com or call 866-424-2829. Hey, real quick, I want to take a look at the futures. They're down still, 108, which is better. The S&P is up $1, which is interesting, or 1 point. And the NASDAQ is up almost 87 points. So maybe we'll see. We talked about Facebook having the biggest drop in history. We talked about computer trips, travel in 2021, and we talked about meme stocks. All right, coming up is today's picks and plays. But did you guys hit that like button? Did you hit that share button yet? Let everybody know what great stocks are coming by sharing this information. I told you I could see when you guys are sharing. So I want to say thanks to Mike for sharing it, because I know he always does. And if all you guys also share it, that would be awesome. You can also leave comments on Facebook and Twitter and YouTube. And don't forget to please leave comments from the Money Chat Now page so I could see who you are. One or two of you guys are saying good morning, and I just don't know who you are. And of course, if you're listening on WWDB Radio, set one of your presets to this channel and listen every day at 7:30 for all you need to know about politics behind the stock market and what's going on. All right, let's talk a little bit about what's going on. Yesterday played out exactly as I thought it would be when the Dow was down 500 points and the NASDAQ was tortured when it was plummeted 3.8%. All because of the bad earnings report from Meta. Today I would expect a rebound, although the futures, they don't look as great as they did. The futures went from a positive to a negative. They were positive overnight, but now they went negative. The market is also inching down, and there may be some plays and some bargains coming, but at the same time, puts and shorts may be the play in the coming year. February has historically been a bad year for me, so I would suggest caution as we continue into the month. As I said earlier, I like Google, and it'll soon be one of my favorite stocks. Meta will also stage a comeback, and the question is when, not if. I like the play, and I even believe the options into May could work as well. Get into the airline stocks and travel stocks because that's coming back soon as well. Oil stocks are also beginning to get a little high for me, but I still think there's some room in there. And of course, we have the jobs data report coming out today, and that may be everything. So we need to know what's going to happen with that. That's going to have everything we need to do. And of course, Biden's already blaming COVID because he can't blame Trump anymore, of course, right? All right, let's talk about crypto real quick. Bitcoin has moved up overnight, and it's just under 38,000. Ethereum is about 2,800. And this might be a good time to buy it. I don't know. Maybe. Hey, Tommy, thanks for sharing it. I totally appreciate it. Hey, Jared. Jared says he bought my book. So if you guys are online, buy my book. I'm telling you right now, for $20, it's going to be the best book you ever bought on money. By the way, gold and silver. I still don't know how gold and silver aren't moving. I don't know. But it keeps, it's at a good price, so if you want to buy it, go for it. Gold is still around 1,800 and silver is around 22. The 10-year Treasury bond is over 1.8% again, and that's probably part of the reason that the futures are dropping today, but that's going to change also on the jobs report. So that's pretty cool too. Hey, Tommy's saying he bought the book too. Thank you so much. Hey, I want to thank all you listeners on WWDB Radio in Philadelphia. I want to thank you for your continued support, and if you're enjoying this show, please reach out and let us know. You can leave comments on the WWDB fan page on Facebook, and you can look us up there. My name is Larry Steinhouse. I am the host of Money Chat Now, and I'm also the CEO of Investor Schooling. So it's going to be a really, really great weekend. I'm super excited, and you guys must have a profitable day. We'll see you soon.